Okay, what is up, tycoons? What's up, traders? Super excited for today's video, giving you guys an update on Pond, okay? Ticker symbol POND. This is the Marlin token. What we're going to do is go over our major Fibonacci retracement levels, explain why these are so important, as well as highlight divergences along the relative strength index, and also go over the MACD and how you can combine all of these things together to help give yourself an edge in the market. Trading is like going to battle, it's like going to war. You need an edge to be successful. And you need to know the proper weapons to use and how to use those weapons to increase your odds of success. So that's what we're going to go over in this video. Remember, none of this is financial advice. This is actually just data breakdown, okay? All of these candlesticks are nothing more than data. And I'm just teaching you guys some of the different signals and how to understand price action so that way you guys can hopefully learn something new. All right, so smash the like button, subscribe to the channel, and we're going to jump straight into it. So let's start off with our major Fibonacci retracement levels. We have the 61.8, the 50%, and the 38.2. These are the three most common and well-respected retracement levels. There are others, but especially if you're beginning in learning how to use these, you want to pay attention to these three levels, okay? So you use these because nothing moves in a straight line down and nothing moves in a straight line up. You get a move down retracement continuation lower or a move up retracement continuation higher. This is how you spot trend continuation. Now you can spot a reversal when you move down, retrace, consolidate a little, and then break through those retracement levels. That's how you can spot a reversal, as well as a reversal to the downside when you move up, retrace, and then break through those retracement levels. So if we take a look, it's no secret that we've been in a bear market, a brutal crypto winter, and a lot of the trend has been a downtrend as of recently, right? So if you take a look here, we have our swing high. We connected down here to our swing low. You see we move down, we retrace up to the 61.8% retracement level, and then we continue that trend and make a low and a lower low. And we've continued to do so, right? Now over here, we have our new high, okay? So we have a new swing high, we have a new swing low, and you see we get a move down and we get a retracement, and look at where we're rejecting, guys, our 61.8% retracement level. And I went over this in the last video, okay, that we needed to be really cautious trying to go long here. You rather would want to see a breakout retest and then get your entry off of the retest, and you can put a stop loss shortly below your entry. So that way, if things end up reversing and it was a false signal, you get stopped out with minimal losses, right? Now, now that we understand how to use these, okay, and what these levels are, we need to go and try and find something else that can help give us some clues as into the possible, future price action. So that's where the relative strength index is going to come in. If you notice, we have a lot of circles on the chart, and I'm going to start explaining those now. So what we have here is a low and then a lower low. So if you take a look at your relative strength index, at that point where we had a low, and at this point where we have a lower low, we have equal lows. So what that means is that the price of this token has gone in a downtrend, but we have not lost any relative strength. We've held our relative strength as the price has gone lower. In this case, it's a slight bullish divergence, meaning that, like I just explained, we haven't lost any relative strength. Now, if you're creating higher lows, right, and you have a low here and we have a higher low up here, then that would be a regular bullish divergence, right? But in this case, because we're making equal lows, it's a slight bullish divergence and really just indicates that we could see some potential bullish activity. Now, no one signal or one strategy is going to work 100% of the time. If they did, we would all be billionaires, right? And every trade would work every single time. What you can do, though, is you can start combining signals together to give yourself an edge in the market and feel a little more confident in your trades. What I mean by that is now we have the bullish divergence forming here on the relative strength index. Take a look at our MACD, okay? A MACD buy signal is going to be when this red line here crosses above the blue line. So our first signal of possible bullish activity was the bullish divergence. And then over here, we get a MACD entry signal. Now we have two signs that we may get some type of upwards activity. So if you take an entry off of that, your MACD buy signal right over here, you can see we got a nice 22% move to the upside. Now, a lot of people are always focused on capturing the 100% move, the 1,000% move, right? This was a very strong move over here of 87% from the lows to the highs, but you're never going to be able to capture all of those moves all of the time. So what you want to do is focus on being consistent and getting 5, 10, 15, 20, 50% moves consistently, okay? And then you can compound those gains, and rather than just, bag holding and always, taking big losses on most of your trades and then getting those 1 or 2 or 3 plays where you really hit the money and, make up some of your losses. If you can focus on those consistent gains, then you can build your portfolio over time. So that's what we're highlighting. That's what we're focusing on, right? So let's say you come in here, you're in 5% profit after you saw 2 bullish indicators of some possible bullish activity. You got 5% profit. You set a stop loss. It runs up to 20%. You adjust your stop loss according to, your own risk management and your own profit targets, and you get stopped out after things start to reverse. Then what happens after you get stopped out over here is we end up getting more signals again. So we have a low, we have a lower low, we have a lower low again. So the price of this token is continuing in the downtrend. Okay, let's say you got 5% profit off of this 20% move. Maybe you got 10% profit. You got stopped out, all right, and you're looking for another entry. Well, what do we see? We see that we come down here and we form a slight bullish divergence again, and then we get a MACD buy signal again shortly afterwards, right? So here's the bullish divergence, and then shortly afterwards, the MACD curls back above, and this time, as I just showed you guys, we got a much stronger move to the upside of about 80%. All right. And you can, again, start adjusting your stop losses, to whatever your own risk management style is, and really just protect the trade. And we summarize all of these things together to know that when you're up here at your major retracement levels, even if you had bullish indicators telling you that we could come up to these levels, it's really important to protect yourself when you're at your major retracement levels. All right. Because most likely the trend is going to continue unless you break out and retest those levels. And that's what we're seeing right here. Okay. So up here, when we hit our 61.8, we actually had about 3 different signals to sell. Okay. The first being that we're at our major retracement level. We're at the highest one, the 61.8. Okay. So now we know, hey, we need to protect the trade. Maybe it's a good time to sell. What are some other indicators though? If you look here, we have a high. All right. And then we have a higher high. So the price of the token has clearly gone up, but look at your relative strength index again, guys. We have a high, and this time we have a lower high. So what this is this is a bearish divergence. When the price of the token is going up, making higher highs, and the relative strength index is going down, making lower highs, this is bearish divergence. It's the exact opposite of bullish divergence. Okay, now combine that with the MACD like we've done multiple times. MACD entry signal is the red line crossing above the blue line. Look what happens here. Red line crosses below the blue line. So we got a MACD sell signal. We got bearish divergence, and we came up and hit our major retracement level. That's 3 signals to potentially sell because we're potentially going to see some bearish activity. Now, this doesn't mean that we have to go and do a complete reversal and continue that downtrend and make lower lows. Look at what we're doing right now. We're consolidating, okay? Remember, I said the steps to a reversal is to come down, retrace, consolidate, and then ultimately break through your major retracement levels. So if we can hold above our 38.2% retracement level, which is going to be roughly 0.09747, all right, then we still have some potential and some hope. But if we start to go down here and we really flip this from support as of now to resistance and head lower, then most likely we're going to get that trend continuation. So pay close attention to that level right now. Again, if you're bullish on this, you want to see us consolidate, break out, retest, and push up higher. That's what you're going to be looking for. And you want to see your MACD, you want to see this red line curl back above the blue line, and you want to see your relative strength index break out and retest this trend line, okay? But for right now, we have, a bearish MACD, we have a bearish relative strength index, and, we rejected our major retracement level. So things are more favoring to the bearish side. And, you could have gotten out up here once you started to see a lot of these signals. So we're going to see Can we consolidate? Can we, continue to absorb some of this price action and get a breakout retest and continuation higher? Can the MACD curl back above? And can the relative strength index break this bearish divergence trend line? If so, we have potential for some more bullish activity. Otherwise, most likely we're going to get trend continuation and continue to head back down to the downside below our 0.009747 38.2% retracement level. So that's it for today's video. Hopefully you enjoyed it. If you did, smash the like button, subscribe to the channel if you're new. I do these viewer requests every week, so all you have to do is comment down below and I'll make a video for you guys as soon as I can. Really appreciate you making it this far in the video, and if you did, most likely you're going to enjoy one of these next videos as well. So make sure to click on one of those.